Hafa, and this is Data Points. I'm Ryan, I'm the president of Pinpoint Guam, and today we're going to be talking with Maria Eugenia, the chief operating officer of Bank of Guam. And it's about time we talk to a lender because financing is a problem that we face in the market. Liquidity, gaps in financing, credit issues, and Maria talks it all. And we talk about data and how data affects their ability to lend. If you like our content and want to see more, please subscribe, share, follow any of our social media platforms. We're on Instagram and Facebook, we're on YouTube, and also on Spotify and Apple Podcasts. Give us a listen. Hafa, and welcome to Data Points. I'm here with Maria Eugenia, the Chief Operating Officer of Bank of Guam. Welcome, Maria.
Thank you, Ryan. Good to be here.
Yeah, glad to have you. Maria and I are in the Rotary Club of Tumon Bay together, but we never really talk turkey there, right? Because, we don't really talk about what we do. We talk about fellowship and service.
True. We're not allowed to talk about what we do. That, and I've been playing hooky for a while.
Don't tell the Sergeant at Arms. There might be a fine coming. It's membership month. So shout out to Rotary clubs around the world and Tumon Bay as well. Maria, the reason why I asked you to come here today is because the whole market is talking about housing shortages. Mm-hmm. And that's come about because of the military and because of the cost of inputs and because of high interest rates. And so there's a distinction that lenders make, and it's an important distinction, and that's between the word attainable mm-hmm. and affordable. Mm-hmm. And can you define those words for me as you see it as the Chief Operating Officer of Bank of Guam?
Okay. Well, I'll give you what I think is the more technical answer, which is affordable. I believe it is defined as housing that is within reach for somebody that has 80% of the median income for a certain market or lower. And then attainable, don't quote me, but I think it's sort of like that next tier. So maybe between 80 and 120% of that median income. Sort of like these are the folks that probably make too much to afford the traditional subsidies. But they don't make enough, or they're struggling to qualify to buy a home at a market price.
Right, and we spoke with Fernando Estevez from Gura, and he facilitates the CBDG, the Community Block Development Grant. And that missing middle is something that he talks a lot about mm-hmm. in terms of like, those would be the people that he would help because he sees the more power to kind of move the market in terms of income and generational wealth building. Let's talk about that. When we talk about the missing middle, that families that earn too much for subsidies, what are the most common barriers that you see from a lending perspective?
Well, definitely the biggest hurdle is coming up with the down payment and the closing costs, mm-hmm. for sure. So aside from VA financing, which, as you know, is 100%, we have a first-time homebuyer program which offers 89.9% financing. So the homebuyers would still need to come up with 10%, basically.
Sure.
So my good friend, Siska Hutapea from Cornerstone Valuation, I want to give her a plug. She's been compiling data on Guam's real estate market for many decades now. And according to her recent data, the median price for a single-family dwelling for transactions year to date is $437,000.
Right.
And that, so 10% down on that, we're talking $43,700. For a condo over that same period, median price is $320,000. So again, $32,000 down payment. That's a chunk of change. I think would be a struggle for anybody. I did a quick search on median household income in Guam. It's a bit old. The data is a bit old. It's from 2020 census. But at that time, it was $58,289. So basically, you're talking about the average household would have to save between 50 and 75% of their annual earnings just to be able to put a down payment on a home. So that just puts it into perspective, I think.
Essentially impossible.
Almost.
Well, yeah, I guess, right? We just did a lending seminar where it's 60-30-10, right? Spend 60,
yep.
Save 30, give 10, right? But at the same time, the idea is you need that. you need that 60% to kind of like function, to live, right?
Right.
When you do front-end calculations for any mortgage is probably going to be 28% of what your income is to qualify, right? The back end is 50. So that is a complicated scenario to solve.
Very, very.
And so from a lender's perspective, I would think liquidity is a significant issue across the board. Would you say?
Well, liquidity from the borrower's
Yes.
Yes. Definitely.
We're good.
Yeah.
We're good.
We're good. No, for sure.
Yeah.
For sure. That is the biggest hurdle. And, this is something I consulted with our front line to see what were the hurdles. And that was bar none. That was the issue.
Sure. So liquidity is an issue, but there are programs like CBDG, GURA. They have programs that fill the gap for liquidity. But you have buyers with stable income, but they have poor credit.
Yes.
And they have no savings, of course. But what do you think? What have you seen as the scale of that challenge in terms of borrowers that qualify from an income standpoint, but they have a $700 car payment, or they have like $40,000 in credit card debt at 15%?
Yep. It's actually really typical. And I would say that more than half of the prospective homeowners that come to us are in that very situation where, they have a job, they have the income, but either they're not able to save or they have poor credit or a combination of both. And, if you think about it, there's logic behind that, right? Because many people who are interested in buying a home, they're probably starting a family or thinking of starting a family. So their expenses are increasing. And at the same time, because they're just starting out in life, they're most likely not at the height of their earning potential. So with all of that, their ability to save for a down payment is obviously challenged. And I would also say, I feel like there's a cultural dimension as well. I feel as a culture, we have a tendency to live beyond our means. We live communally, and we're extremely generous with our family. We always want to help, right? And so I think that, as a bank, we see that all the time where parents and grandparents, they would borrow money to, put their kids through school, buy them cars and so forth. And so I think all these factors play into our financial discipline to save and, properly manage our credit.
But again, that becomes a significant issue. And so even with the most permissive federal programs, ultimately, you're looking at like a FICO score of like, I think 520 or something like that, right? And so, and people can have really great jobs, but if they have significant lates, they're not going to be able to get a loan, even with subsidies. But the irony is, the rate can be subsidized with some programs all the way down to 1%. You just need to fix the credit. But what are the most promising strategies you've seen to get people over that hump? To solve that problem, to solve the credit repair issue? So
the bank has a couple of tools that can help families get loan ready. Mm-hmm. So one thing that we offer is called Savvy Money, and it's a feature that's available in our digital banking platform. So in our online and mobile banking, it's free. And basically, it gives you real-time visibility into your credit score. There's a number of tools like that are out there, but it'll tell you when you've moved up or down. I believe every month it adjusts, and it tells you the reasons why. It gives you tips on how you can improve your score. So I think that's, the first big step is just having visibility into it. Mm-hmm. We also have some financial well-being learning modules available on our website. If you go to our homepage, bankofguam.com, under the main menu, there's a link for Learn, and then you'll be guided through a questionnaire that will eventually give you a customized playlist of modules based on what your goals are. So those are some tools that we offer. But I would also say that it's, I think we shouldn't be waiting until we're looking to buy a home to brush up on financial literacy. I feel like it's really important to emphasize, especially with young adults, why it matters to maintain a good credit score so they don't find themselves in that position later in life where they're trying to repair damaged credit. But if they're in that situation, sometimes it's a longer game. We have borrowers that come in, or prospective homeowners that come in, and sometimes we sit down with them to figure out, okay, what do you qualify for? How much do you need to save? And then what steps are we going to take to kind of rehabilitate your credit? And it's not a quick fix or an overnight thing, but we've had some fair success with that too.
And I do agree it's a mindset thing. And I think it's something we can instill from a young age just through, again, like you said, financial literacy. Because if we make it cool to talk about money, we make it normal to talk about saving, we incentivize that, and that becomes part of what we do, then it lifts everybody and it just becomes day to day. And that's why we support mentorship and financial literacy programs. And I love that the bank is into that as well.
Absolutely.
So if we don't solve this issue, what do you think the consequences will be if we leave them in the middle? Because like in this instance, right, again, Fernando, he said that your total monthly housing expense should be $2,000 base a month, including internet and utilities. That's the market. That's what the median income says. We know that the average rent for a 3-bedroom is more than that before we get to utilities, before we get to internet, before any of that stuff.
Yeah.
And in this place where 70% of your income being, needing to be pushed towards savings to get to the place where you can buy, what are the consequences if we don't solve this problem?
Yeah. Well, I feel like that those rules of thumb, I think, are a little bit, I don't want to say misleading, maybe disheartening, because I think they're based on market areas that are totally different from ours. The reality is that, where we live in this part of the world, cost of living is comparatively higher. Wages are comparatively lower than the average alternative in the mainland U.S. And so when you look at, 30% of your income, all of the numerator, the denominator, all of that is off, yeah. Right? And so I think that it's probably not realistic that we can compare ourselves, but it's good to understand that and at least know where we're starting from. But back to your question, if we don't solve this credit and liquidity issue or find a way for the missing middle to find a path to homeownership, what effects could it have on our community? I think if you agree that home ownership is a tried and true path to building generational wealth, I do believe that. I know that there is a lot of talk out there about how that is sort of like a boomer mindset or like an old person mindset. And I try to hear that perspective as well, but I believe that it is a very good path to building wealth and generational stability. So I think solving this issue should be a high priority for stakeholders at all levels. If you own your home, then you can draw on that equity to provide better opportunities for your family, education, investment, starting a business, a number of things, right? And I also think it's common sense that home ownership leads to stronger communities. If you own your home versus renting it, you're going to take better care of that home, right? You're going to take an active interest in the safety of your street and your neighborhood. It's just, I think all of us can relate to that, especially if you are a homeowner and you look at your street and you know who owns their home and who doesn't. There's a very clear difference there. And so I do believe that makes for stronger communities. I also think if we don't solve this issue, it's going to be harder to keep our young population here on island and not leaving for better opportunities elsewhere. It's also going to be harder to get college graduates to come home and repatriate that talent. So I do think this is a critical issue, and I hope that lawmakers and industry stakeholders are interested in solving it.
I agree. And I agree, like real estate is one of the best avenues to build generational wealth. Unless you have like inside knowledge, like your dad's a hedge fund manager or something.
Yeah.
Or you're a member of Congress, but When you're working with government-backed loans, they have their own criteria and their own structure, and that creates gaps, just like we were talking about in terms of the missing middle financing programs and income limits. So there are gaps that prevent people from being able to participate in the market. One of them is like, say, if I want to buy a multifamily, but I want the income to count towards my qualification, I have to be classified as an experienced real estate operator, meaning I have to have like participated in the real estate business or have an investment property before. And then the bank will consider me an experienced investor. or sometimes the market brings turnkey products where a developer engages, you have the land, and then the contractor comes in and says, hey, I'll put a mortgage on your land, a private mortgage, and I'll build the house. And when you're done, just cash out refi, pay me off, and you'll have equity from the build. Talk to me about ways you've conceptualized or the bank has thought about bridging those gaps to kind of meet and solve those middle problems that keep inventory from getting to the market.
Well, I'll say that we do have longstanding relationships with many local developers. And over the years, we've been flexible and creative in helping them structure deals. But I think the key is that it takes time to build that relationship and trust between the bank and the developer. So they're usually bringing some kind of equity, some kind of skin in the game. And many of them may have started off small and built their capacity and their expertise organically over time. So I think that's the key. It's going to be harder for, just somebody that's completely new to the bank to come in and try to get something financed, especially, with very little equity. But I think it's really more about just building the trust, and then the bank will be willing to, take a risk.
Well, it comes back to liquidity, right? And the liquidity is an issue for a developer as well, because the when you're speculating, there's a long carry, especially because the structural governmental permitting issues that come through. So as an example, typically most developers Teo Chamber of Commerce was in here talking about the permit cycle. He said it takes 18 months to get a permit, right? And so in that 18 months, if I've acquired the property, if I'm getting bank financing, there's a carry. I'm paying a mortgage payment while I'm going through this process, and I have to roll that into the end, to the exit. And then I build and I come into these construction delays, and then I have to, and so this long tail while I'm accruing interest, that ultimately gets passed on to the consumer. And so is there a product or a solution do you think you can come to the market, or how can the process be shifted to help you do more loans? When in terms of the structural issues that exist to bringing a property to market, right? There's the long development process, the permitting process. And so from a policy perspective, there are certain policies like, developers not being able to take non-refundable deposits until their approval is issued. How do you think the government and the bank banks can work together to make, to incentivize more developers to come to the market?
I think that I'm probably not as knowledgeable about all the hurdles that developers are going through as you are, but I feel like there's probably tweaks that can be made to the current policy to make that, more palatable for them. But I'm thinking big picture. If you look at the development projects that we've had over the last 20 years, there's been a few of those LIHTC deals, and those obviously don't work unless without the tax credits.
Sure.
And that's a federal program. But aside from that, if you look at multifamily, it's been few and far between as far as putting new inventory on the market. So I think if we're really going to move the needle on adding inventory, then I believe that the local government should come to the table with some kind of financial incentive that makes the whole equation make sense for the developers. And banks, of course, have a role in this too. I think banks could come to the table as well. We can provide, obviously, the capital. We can provide financial education for home buyers, whatever support we can provide in that regard. And then, of course, the developer brings to the table the expertise, the know-how, and the execution, right? So I feel like that is something that we can all come together and find a solution. But again, I think local government programs are going to be essential to really moving the needle.
So with that said, right, could you participate in a shared equity model or like revolving funds that recycle capital into the market for loan programs?
Do you mean, can you be more specific? What do you mean, like,
Well, like
the down payment or?
Well, yeah, for liquidity issues, for stopgap credit, debt consolidation, because that would help a lot, right? If you had a low interest debt consolidation for people that met certain criteria, that would push them over the threshold potentially, right?
Yeah, I think that banks could definitely, be more creative in some of the programs that we offer. And I think the key is that, all stakeholders would come together so that nobody's taking an undue level of risk, I think is the main thing from the bank standpoint. We're willing to do our part, but I do think, there can be a role to be played by the local government as well. And hopefully, we have no control over federal programs, but I think we can expand on the local programs that already exist. We do have some good local programs. There's the Guam Housing Corporation, where they help with the down payment and the closing costs. There's some limitations to that. Maybe that could be enhanced to help more people. But I think, more programs to help both the home buyers and the developers, both ends of the spectrum, I think that would be very beneficial.
I see. Okay. Maria, this is Data Points, and we at Pinpoint, we're prioritizing data. And that's one of the reasons we started the company, is because it was so hard to get good data to action real estate decisions. So we made it our mission to aggregate data for the benefit of stakeholders like lenders, construction companies, surveyors, appraisers. And we want that data to be in the market. What data issues do you see as a lender? What challenges does that create for you?
I would say data is supremely important, especially when you're looking to digitally transform or provide these types of end-to-end online applications, or even anything personalized for personalized offers to the borrower, or just making intelligent decisions about who to target and how to identify new business. Data is the foundation of all of that. Even dealing with our own data inside the bank, that's challenging as well. But when you're talking about coordinating data from a number of independent stakeholders, that makes it even more challenging. But I think the data is definitely out there. I think the challenge we have is that it's not tracked and stored in a way that makes it easy to use or create value. So I feel like if the government would make certain data searchable and accessible, I think that could be a real game changer for the industry. So an example of this would be filed tax returns. So for example, if the bank were able to obtain the permission of our borrower, the taxpayer, to pull these filed returns in the process of pre-qualification, we could really make that process so much smoother and efficient, because most of the time, whether we're talking about a developer or even a home buyer, for them to go back and dig up all of those files sometimes can be very time consuming. And so that's one opportunity where if we were able to do that, and we are actually able to do that in our California market, it just really makes the process so much easier. So that's just one little example of how, that could help.
Sure. And you didn't say it, but I know for a fact, having worked with you, that you guys are going completely digital in your mortgage process, and to include the note. And that's seamless, and to the point where we can even take it straight to land management without actually applying a signature, but we'd have to outsource the local component where we apply a digital signature. But just because there's a gap in the law that doesn't allow us to affix the signature digitally, like the Commonwealth of Virginia does, and remote online notarization, which has been very common in the market since COVID. It's an amazing thing. And you were one of the first local lender to get digital notes approved in your process. So that's going to be amazing. So start to finish, no one ever has to touch a piece of paper again. And from a data aggregation point, how amazing is that for Department of Land Management? Because now you don't have to index all the stuff. You don't have to do all the data entry. You don't have to repeat the step of scanning. It's seamless. It goes into a bucket. It gets reviewed. It gets sealed, goes back to you. But how great would it be to do everything? And one of the things that I assume, and correct me if I'm wrong, that affects your pricing and your underwriting process is, again, the lack of good data. Is this zoned properly? Are the boundary points compliant with zoning code? How do I seamlessly verify that? But because there's no viable property tax map, how do you do that? You can't visually do it. None of the property points locally are what we call COGO, geographically located. They're all shape files, and they're just kind of plastered on. So if you look like a GIS map, like, what do the lines mean? Well, it means a general area. It's helpful to interpret, but can you rely on that data locally? No. But if you could, how much better would your underwriting process? How much quicker would you be able to go if you could action on that data? And I think the answer is much.
Yeah, definitely. I mean, if you take a look at how mortgages are done in the mainland, there's so many different mortgage providers, and they're so quick, right? And obviously a part of that is because all the digital transformation and the underlying data is all available to make that process seamless for the customer. And here, there's still many pieces of the process that are highly manual, and that unfortunately just makes the process cumbersome and take longer. So any little thing that we can do to integrate that data would definitely just increase value for all parties, for the customer, for the banks, for the every person involved in that process.
And confidence in investors coming to the market, where we're not filling out like archaic forms and it's a seamless transaction like it would be in any other market. And to say that we're not capable of that is, it's just a mindset thing and an investment thing, and a shift.
Yeah, it definitely. It definitely takes an investment. In the bank, I can say we've invested a huge amount of money in digital transformation because the market demands it, right? Our customers demand it, and I think just all stakeholders are dealing with the same thing in their own pace.
Yeah, and usually it's easy to buy the software, but what's hard is to get the people to leverage the software, to use it, to adopt the systems, to not try and circumvent the systems.
Customer behaviors is usually the hardest part.
Right, because I have this
or
AI
employee
tool.
behaviors.
Yeah, it's internally too,
yes,
right? But I have this amazing AI tool, but no one wants to use it. They just want to come into the bank. Yes. So you line up, right? It's like, hey, did you know you can make electronic
human
deposits?
beings don't like change, right?
Well, we have a market that I think is very averse to change. Yeah, in a lot of ways, right? This is the way I've always done it, and I want to keep doing it that way.
Yeah.
So again, it's a mind shifting. Maria, what would a truly collaborative approach between banks, developers, government, and community stakeholders look like to you? And what role do you see the Bank of Guam playing in that vision?
Well, I think I'll just kind of summarize. I feel like if we all came together and truly collaborated on a solution, I think what the banks could bring to the table is obviously the capital, the underwriting expertise, and also financial well-being education for homeowners and maybe even for developers too, to kind of help them with the business side as well. For the government, I feel like the local government specifically, we have no control over the federal, but for the local, if they would be willing to come and provide some type of a financial incentive to improve the economics for the attainable housing developers, I think that would be critical. There's a number of ways they could do that. They could maybe mirror how the federal does the low-income housing tax credit, something for attainable housing. Maybe even providing the land, a low-cost land lease.
Sure.
Right? That would greatly help. So I don't want to prescribe exactly how that should be, but I think that, the economics are just so hard that something needs to be done to make those deals palatable and ultimately to increase attainable housing inventory in the market. And one more piece that I feel like the government can help with, which they're already doing. So expanding and enhancing on the programs that are available for down payment and closing cost assistance for the home buyers.
Right. The Guam Housing has that $10,000 grant.
Yes.
To go to a class, right? As long as it's funded. And that's a great program. That's gotten a lot of people into houses.
I know we've had a lot of success with that program too. So, it's there and it works. There's some limitations to it, but I feel like that could be expanded.
But I think it really is a collaborative approach. Like, USDA comes in and then GOR comes in with half, and then there's ways to guarantee, and a portion of the loan is forgiven. But it's going to take a varied approach, not just in financing, but also materials. I think
actually that's a really good point too. Is like when I say all stakeholders, even the contractors have a role in that, right? Like we need to be more creative and open-minded about, okay, what type of materials are out there? How can we innovate with construction materials and methods in order to bring down the cost?
Sure.
Right.
But there's still a stigma around alternative construction methods that are non-concrete, right?
Yeah.
And yet, to a degree, lenders are averse and insurance companies are averse. And even if we got everything AAA certified, there's still that, Lockwood's been around for like a long time, like at FD, there's like 4 Lockwood houses and they've been standing since Typhoon Roy. But you don't have a significant investment in non-concrete, but that could really bring down the cost of everything for everybody.
Mm-hmm.
But it's, again, a collaborative approach where the government can come in, the insurance companies can, and incentivize everyone to get behind that product.
Yes. And I can't speak for all the banks, but I feel like there is a desire to come together and provide some type of solutions. And I do feel that everyone has a little bit that they need to get.
I agree. And so what do you think, what gives you hope that Guam can address this liquidity and affordability crisis, and how do you think financial institutions can lead the way?
What gives me hope is that I've talked to a lot of people who are in some way, shape, or form, invested and part of this industry and this community, such as yourself and many others I've talked to. And these are all smart people, no shortage of ideas, no shortage of intelligence. And they're creative. They're coming up with strategies. And I think it's just going to take some leadership to kind of pull that all together. I'm hopeful that we can solve this problem. I think we need to solve this problem. We have to. So, I guess it's not really hope. I'm pretty confident that we can, if we bring all the right stakeholders together and just, put our heads together.
And I think that's what it is, right? We put our heads together. We don't go around pointing fingers saying, hey, you do this, you do that, as the government this. No, this is what it is. We just got to figure it out. And we can make small tweaks. But to think we're going to go through all these legislative changes to make all these things, no, just the environment is what the environment is, and we just have to shift the way that we deal with it.
Yeah. I mean, I can honestly say, even if nothing changes with the laws, we're still going to move forward with our plans to, overhaul our financial literacy programs, to do a little bit more, to be proactive with homeowners, educating them on their options, educating them on how to prepare their credit to be, to get better pricing. So, we're going to do what we're going to do regardless. And I think a lot of people are of that same mindset. But if we can really all come together and just be more creative collectively, then I think that would really move the needle.
I agree. And we'll be right there with you.
Awesome.
Thanks, Maria. I really appreciate you coming on today.
Thank you. It was fun.
All right. Thank you. That was a great conversation with Maria, and she talked about all the things, well, not all the things, but we talked about a lot of the factors that come between people who want to own homes and actually being homeowners. And that's something that we have to solve for this market. We've had so many conversations that circle back to the lack of attainable housing for the market, causing significant social, economic, and financial issues, and preventing people from staying here, preventing companies from thriving, and preventing people from building generational wealth. And it's a problem that we have to solve, and it's a problem that we're focused on solving at Pinpoint, and we're talking about with you on Data Points. If you have a question or a problem that you want us to find out about or solve, please send us a comment, share our content, and talk about it, and share it with your friends, and ask us questions, and we'll find answers. Thanks to you.